Are you going to put money in your RSP or your TFSA? Here's what you need to know. I'm Quinn Waddington, Senior Investment Advisor and Branch Manager at CG Wealth Management, and I'm here to talk to you about whether you should invest in an RSP or a TFSA. Get a lot of questions this time of year. RSP deadline is March 1st for 2023, and that is to get RSP contributions in for the 2022 tax year. So before we dive into which is best, let's take a look at a few examples. What is an RSP? What is a TFSA? An RSP is taking funds that you have, putting a contribution in and using that against your taxable income from the previous year. So if you did that between now and March 1st of 2023, you would be putting that in against your income of 2022. Basically, meaning if you are paying 40% tax and you were to put $10,000 into your RSP, that would save you $4,000 worth of tax on your tax return. Of course, you can put money in throughout the year, so you could be putting money in early 2023 for the 2023 tax year, but the deadline for 2022 is March 1st, so got to get it in before that. You get 18% of your earned income eligible as an RSP contribution, so you're building up room every year that you have that earned income. But there is a max, so if you have much higher income, then your max for 2022 was $29,210, and just so you know, for 2023, $30,780 is the max contribution room that you earn in a year. If you have previous contribution room that you haven't used, you can make up for that at any point with no limit other than your individual contribution limit. As for a TFSA, there's basically no tax consequences. So you don't get any sort of credit when you put money in, but when you take money out, there's also no tax on that. Whereas with an RSP, forgot to mention, when you pull money out, you are going to get taxed on that. It gets added to your income, and whatever your tax rate is what you'll be taxed on your RSP withdrawals. Of course, the majority of people take that out in retirement at a lower tax rate than when they're working, but you still will be taxed. TFSA, no tax on a withdrawal, but you don't get any credit for putting money in. Everything grows inside of your TFSA tax-free, so any interest, dividends, or capital gains you earn, that's all tax-free inside of there. There are some contribution limit rules to worry about as far as putting money in and out of the account, but each year you get an allotted amount. This year the maximum was $6,500. That's going back to 2009 with different annual amounts each year. So if you haven't touched your TFSA and you were 18 in 2009, then your total contribution limit is $88,000. Again, you can make up for that missed amount at any point with a large sum of money. Just be careful putting money in and out too often, as there are some contribution limit rules to worry about. What is better for you, RSP or TFSA? Of course, this depends on your personal situation and why I suggest a financial plan for everyone. A few things to consider in your situation. What are your liquidity needs? If you need money pulled out of an account in the next year or two, you're probably going to want to lean towards the TFSA because it is much more liquid, and again, you don't get taxed on pulling money out of there, as well as you don't lose that contribution room for good if you pull money out of your TFSA. You just have to wait till January of the following year. Perhaps there's some sort of planning need that you have, some special situation. You're going on mat leave or taking a sabbatical. You might be buying a house. These things play into that. If there might be an opportunity to pull money from an RSP at a lower tax rate, or using something like the home buyer's plan, that is something to consider for sure. How much income you make. If you are very low income for a year or in general, then an RSP probably doesn't make sense for you because you're already at a very low or minimal tax rate. TFSA is probably your better option. If you're at a higher tax bracket, then RSP definitely makes sense. Of course, ideally, you would be topping up both accounts every year, but RSP will make a lot more sense, and then potentially using the refund, the tax refund that you would get to top up your TFSA. That is something that many people do, but if you are at a higher income, then RSP generally makes sense. Again, depends on your plan. Pensions, if you have another pension somewhere, that's using up some of your RSP room. TFSA might make more sense if you have a pension that you're building up with your employer. So those are just a few things. We definitely look into that family situation. What's the household income? Can we split these incomes? Lots of different scenarios. So it is very personalized. If you want to chat about what's best for you, just reach out, book a meeting through the website, or give me a call. Happy to help. Take care, and remember, March 1st, 2023 is the RSP deadline, so get those funds in now. Thanks.